I look at your company, I just sort of, you are the true personification of conglomerate at work. But we read from a variety of people around the world about a slowdown. How does Australia look to you? The RBA are worried. Are you?
Well, look, I think generally Australia's in pretty good shape, but we have seen a decline in retail trade and consumer sentiment, and that's been driven by a number of issues. We've seen some increases in cost of living, concerns about house prices, and we're about to embark on a federal election campaign. And I think a number of these issues are weighing on the minds of consumers at the moment.
Are you seeing any of that in the home business that you run? We'll get into the divestments in a moment, but I want to focus in on the housing side because that is the big story that we cover every day. What are you seeing at the coalface?
Well, we have a number of different retail and industrial businesses. So within our portfolio, we have a degree of diversification. We do have the leading home improvement outdoor living business, Bunnings. Some people think that business, by definition, is highly exposed to the housing cycle, but as we've demonstrated over many decades, there's a lot of diversification in that business, both commercial, consumer customers, a lot of necessity spend on the necessities of life as well as discretionary. So we feel it's quite a resilient business, and I think the result that we reported today demonstrates in a challenging retail environment, we were still able to grow sales by 5% and deliver 7.9% earnings growth.
Obviously, you did some divestments last year, and the market sort of seemed to like that. It freed up capital. What are we going to see more divestments from you? Because there is the argument, Rob, that you could suffer a little bit of conglomerate discount. So what is the strategy for you?
Well, man, it's our structure, I think, overcomes a lot of the problems associated with some conglomerates. We have a highly decentralised model. We are not afraid of actively managing the portfolio. And what you've seen over the last year is an example that we are prepared to actively manage the portfolio to ensure that we release value at the right time in the cycle for our shareholders and ensure that our capital is allocated in areas where we're confident we can deliver good returns in the future. It was a really busy year last year, a lot of transactions, and frankly, I'm quite happy with how our businesses sit at the moment. Our focus is very much on investing in our existing businesses and looking for new investment opportunities rather than necessarily looking to make any more divestments.
Where would those opportunities be? You can't whet an anchor's appetite like that and then not sort of say which direction you want to take the company in. You sort of moved out of the supermarkets and the auto mechanic business. So where do you want to go to?
Well, we currently are looking at various opportunities in the industrial sector. We have some really strong capabilities in our division around chemicals, fertilisers, the energy area. So a fair bit of focus looking at opportunities in adjacencies and new businesses there. One of the key areas of focus in our business at the moment is investing more in data and digital. There's a lot we can do in our existing businesses. We are materially increasing our investment in those areas, and why that's exciting is that there are a lot of adjacencies to our existing retail businesses that we can leverage. So just to give you a bit of a snapshot, they are some of the areas that we're looking at. But the other thing we say is that it's really important to be patient and opportunistic. The only acquisitions and investments we're interested in are the ones that are going to deliver value to our shareholders. And often you need a number of circumstances to arise in order for the right deal for shareholders to present itself.
I mean, look, often when I do these CEO interviews, people use phrases like, I want to do bolt-on acquisitions, I want to do large-scale reformation deals. In this technology space, as you've hinted, what's the kind of size of deal that I can expect you to want to do? Well, the great thing about our operating model is that we have the capacity to
to execute a number of those bolt-on acquisitions, if you'd like to call it that, across our divisions quite easily. Our divisions run on a largely autonomous basis. We have really good teams in there, and it's those teams being close to the action, close to customers, that can identify those good opportunities. It's really difficult for us to be too precise about which opportunities are going to arise and when. As I said, we tend to be opportunistic. We're prepared to be patient. Actually, one of my jobs as CEO is not just to identify and recommend to the board which companies to invest. It's also resisting the temptation that is often there to go and grow for the sake of growth. We're not interested in growth for the sake of growth. We're only interested in investing if it is ultimately going to be in the best interests of our shareholders.
Listen, Rob, we got some data this morning. I want to get a sense from you. You're one of the biggest employers in Australia, and the headline is Australia employment surges. Okay, are you seeing tightness in wage inflation in any part of the businesses at all?
Well, you're right that the unemployment rate at a national level is fairly low in Australia, and I think that is one of the positive elements of the Australian economy. If you look at a more regional level, so in some regions, notably our home state of Western Australia, we've seen a slightly higher level of unemployment. Wage growth has been somewhat stubborn. We haven't seen as much wage growth as, frankly, we'd like to see. And as a retailer, we think wage growth is a good thing because it ultimately improves retail spending. We have actually seen in the retail sector some stronger than inflation increases in our wage rates, not just ourselves, but we've seen that flow through in the retail sector. So, look, I think we're on the verge of potentially seeing some improvement in real wages, but ultimately it's going to come back to the broader strength of the Australian economy. And I think at the moment there are a few concerning signs around access to credit, which could make the real wage growth more difficult to achieve, and a degree of policy uncertainty facing into a federal election.